Pick the right stock at the right time.
Good morning, you're watching All You Need to Know on Bloomberg Quint Live, India's first live streaming digital news service. I am Jayesh Khilnani and along with me is Agam Vakil to take us through the F&O space. But first, let's have a look at what can one expect from trade today. Well, given that the US markets posted a stellar rally for themselves, the Dow Jones in fact closed more than 200 points higher. The SGX Nifty is pointing towards a 40-point gap up and a start near the 10,600 mark. Let's have a look at some of the other cues that we got in terms of the ADRs, how they panned out. Mixed flows for most of them. However, the banking and the IT space were in focus. With ICICI Bank and HDFC Bank, the ADRs gained more than 1% each, while we had Tata Motors and Infosys, those managed to close lower for themselves. If you have a look at the commodity cues that we are getting, no major cues from the entire commodities basket. Have a look at crude oil prices. Those are trading about 0.5% higher after an equivalent gain in the overnight session as well. If you have a look at the base metal space, no major reactions coming in over there as well, except for tin, which managed to close more than 2% higher for itself. And we had aluminium and zinc, which also managed to eke out gains for themselves. We had copper, nickel and lead, which closed lower for themselves. But have a look at the Shanghai Futures Exchange and especially steel. That is trading about 2.5% higher. Gold, that is actually trading flat near the 1350 mark. So we'll have to wait and watch how the entire commodities trade actually pans out today. But in terms of the fund flows that we got for India, have a look at the foreigners sell number that we got, close to 1,000 crores selling yesterday, while the domestic institutions, they pumped in more than 700 crores. For the month itself, domestic institutions have bought more than 4,100 crores worth of equity, while the foreigners have sold in excess of 1,250 crores. In terms of some of the key indices that we got, it was a largely flat day or a range-bound day for the Nifty, and the Nifty Bank, Mid-Cap and the Small Cap Index. Those also closed flat with the Small Cap Index managing to gain about 0.3%. In terms of some of the gainers and losers, sector gainers and losers that we got, Nifty Realty, that surged more than 1%, while the Nifty FMCG index also managed to close 1% higher. In terms of the losers that we got, Nifty Pharma and Nifty PSU Bank, about 0.5% lost for both of those indices. Now, if you have a look at the India VIX index, a measure of the volatility that we get, that actually managed to cool off on account of the consolidation that we saw and closed about 1.5% lower. If you have a look at the contribution, what led to the 20-point gain on the Nifty was heavyweights HDFC, ITC, ICICI Bank and Reliance, which managed to gain, while we had Axis Bank, Infosys, L&T and TCS, which declined in trade. But with that, Agam is here to take us through the F&O space.
Sure, Jayesh. As you mentioned, we've seen about a 20% up move in the Nifty. So largely consolidation, range-bound movements, which is the reason why we haven't seen too much change with respect to the futures open interest. And it's the same for the Nifty Bank futures open interest as well, where we saw about a 5% increase, but nothing to take home to. Unexpected lines. Very little change in the India Volatility Index, currently at 14. It's the same for the Nifty put-call ratio, which now stands at around 1.63 in comparison to 1.65. In terms of changes in open interest, what we've really seen is a little more writing in the 10,500 put and unwinding in the 10,300 put. On the other hand, a little more unwinding in the 10,400 call as well. So these some levels that we can watch out for in today's day of trade. But Rampur Chini moves out of the F&O ban, and we're also keeping an eye on several other counters such as DCB Bank, which has seen fresh longs, and Power Grid, which was also in focus, considering we've seen that lead the Nifty gainers in yesterday's day of trade, an accumulation of nearly 17% in open interest. So a bunch of stocks here to watch out for, and of course we'll have to wait and watch whether or not the consolidation in the benchmarks continues. But that's as far as our own markets are concerned. Let's go across to Bloomberg's Yohan Mann for the top headlines from across the globe.
Japanese exports expanded for a 16th month despite continuing trade tensions. The trade balance remained in surplus in March, but the 2% increases was less than expected, with sales to the U.S. and the EU nearly flat. Imports fell by 0.6 against a forecast rise of more than 6%. That's after a surplus of $7.4 billion compared with estimates of $4.7 billion. The International Monetary Fund expects the global economy to continue expanding for 2 more years, but warns the seeds of its next demise have already been sown. The fund is leaving its forecast for growth this year and next unchanged at 3.9%, but it projects global growth will fade as central banks tighten policy, U.S. fiscal stimulus subsides, and China's gradual slowdown continues. White House economic advisor Larry Kudlow is downplaying the chances of the U.S. re-entering the Trans-Pacific Partnership, saying the idea is more of a thought than a policy. Kudlow says Washington is in, quote, preliminary stages of any discussions, and officials are more interested in a separate deal with Japan. New Zealand says the U.S. would not simply be welcome back anyway.
If the United States wanted to follow through on their interests, that would trigger a renegotiation, as it would if others were interested in joining the agreement as well. So we'll continue with the process, as it were, and see what comes of the signals that they've made. But it's not simply a matter of putting their hand up and slotting straight back into that agreement.
And President Trump says the U.S. has begun direct talks with North Korea ahead of his potential meeting with Kim Jong-un. He says officials have had discussions at very high levels, and 5 locations are under consideration for the historic talks. He's given South Korea the go-ahead to negotiate a peace deal with the North and suggests he was responsible for the success of the recent Winter Olympics.
North Korea is coming along. South Korea is meeting and has plans to meet with North Korea to see if they can end the war, and they have my blessing on that.
Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Yvonne Mam. This is Bloomberg.
We're hearing of this production shutdown, which will have implications in the cash burn for the second quarter. Could be pretty intense, but we're sort of expecting that as well. They're in this ramp mode, need to get production and get some of those back orders filled. And I guess they're realizing that automotive manufacturing is difficult, automating it is difficult, and that there is a reason why it's done the way it's done by manufacturers that have been doing it for 100 years.
Kevin, just listening to Elon Musk recently, it certainly gives you the impression that he's stepping away from fully automating the process of building these cars. Would we be reading between the lines correctly if that is kind of what we're thinking right now?
Yes, and I think, you know, for investors to sort of pull this back into that court, you would have to look at some of the things that the company's being valued on, right? This idea of automation, or this better way of building a vehicle as a competitive advantage, you know, is sort of playing out to not be the case. That the established automakers have been doing this a long time. They know the right way to do it, and there's a reason it's done the way it is. And for me, as an investor, I would be looking at some of the other things that are perceived to be competitive advantages of Tesla, whether it's the drivetrain technology, whether it's the lack of dealership and distribution, and really reassess those things, whether they're really advantages or not.
Well, back to local equity markets. Stock of the day is Tata Sponge Iron. Yet another good set of numbers reported by the company. If you look at the top line growth, we're looking at a 46% growth there, a number of around 243 odd crore as compared to nearly 167 crore that we've seen in the corresponding quarter of the previous year. Net profit, it's a twofold jump there. We're looking at a number of 46.7 crore as compared to nearly 21 crore that we've seen in the March quarter of the previous year. Also, if you look at the EBITDA, that's where the performance is actually coming in from. More than 2.5-fold jump registered at EBITDA level to a number of 61.5 crore as compared to nearly 26 crore that we've seen in the corresponding quarter. Let's look at the margin picture. That's almost shot up at 25% as compared to nearly 15% in the corresponding quarter of the previous year. So what has really gone down well for this company? Well, the cost optimization measures undertaken by the company along with higher sales has led to a good show on the operating performance of the company. If you look at the raw material expenses, that as percent to your overall net sales, they've come down to 60% from what we've seen earlier, a number of as much as 66%. Also, if you look at the employee benefit expenses, that as a percent to your net sales has come down to 4.6% as compared to nearly 6% that we've seen in the corresponding quarter. Other expenses as a percent to your net sales have also slipped for this company, leading to a good show. Now, this along with your lower depreciation and finance costs has led to a good bottom line performance. Looking at the segmental performance, well, the performance is actually coming in from the sponge iron business, both for your top line as well as your operating level. If you look at the sponge iron business, that's registered a 33% growth on year-on-year basis, while the power business has just risen as much as 10% on year-on-year basis for this quarter. In terms of the EBIT performance that we've seen, we're looking at a good 269% jump in sponge iron business as compared to nearly 40% jump that we've seen in power business.
We are here to brief you about currency and commodities markets. Starting off with rupee first, it extended its losing run for the second straight session yesterday, and it ended near the 7-month low of 65.65 levels against the dollar. Now, this is on the back of persistent capital outflows from the local equities market, along with surging crude oil prices, largely weighed on the domestic currency. Now, remember, the rupee has turned out to be Asia's worst performing currency this year after Filipino peso. Now, the domestic unit has weakened close to 2.8% so far this year, and also rupee has depreciated close to 1% in the last 3 trading sessions, thereby breaching a key technical level of 65.50 levels against the dollar. Now, speaking of the bond market, sovereign bonds ended little changed yesterday as yield on the 10-year benchmark security ended steady at 7.49%. In terms of flows into debt market, global funds reduced their rupee debt holdings yesterday for the 3rd consecutive session. They reduced their debt portfolio by close to 2,260 crores according to NSDL data. Well, on the global front, dollar gained marginally yesterday on the back of upbeat economic data, and it trades higher for the 2nd consecutive day today. It trades near 89.50 levels. Elsewhere, euro slipped in trade yesterday. It ended 0.1% lower against the dollar on the back of disappointing data. Well, while pound joining the league, it snapped 7-day winning streak against the dollar on the back of disappointing UK wage data. And lastly, speaking of dollar rupee, now it is trading at 65.68 levels against the dollar in the non-deliverable forward market, which indicates a flat to negative opening for Indian rupee in today's trade. Well, having said that, let's shift focus to commodity space. Good morning, Jayesh. What cues are you picking up today?
Morning, Saloni. For a change, no major cues coming in from the commodity space. The entire basket, if you look at, starting off with crude oil prices gaining about 0.5% in trade after an equivalent surge in overnight trade as well. Now, this is largely on the back of surprise inventory data that we are expecting. So the US crude oil inventory is likely to fall nearly 1 million barrels for last week. So that's a positive, and hence the uptick in prices. As far as the base metals are concerned, the index closed. Most of the base metals actually closed mixed on the London Metal Exchange. Aluminium was once again in focus, and we understand that ETF investors are now cashing on the gains due to the aluminium surge that we saw in the last few days. Now, we also understand that the aluminium ingredient alumina, that is actually forecasted to hit a record high after the sanctions were actually imposed on Rusal. As far as copper markets are concerned, we understand that speculators have increased their net long positions on the London Metal Exchange. So, keep an eye out on that one as well. Tin, which was the top gainer in trade, surged nearly 2%, while we had aluminium and zinc, which managed to eke out gains for themselves. Copper, nickel and lead actually declined nearly 0.5% to 1% each. Now, if you look at the Shanghai Futures Exchange, Shanghai Steel particularly in focus, as it has actually gained nearly 2.5% in trade. Lastly, the precious metal space, gold is actually trading flat on the auspicious day of Akshaya Tritiya near the 1350 mark.
Well, amongst the stocks that we're tracking in trade today includes AstraZeneca Pharma India. Now, this is because its parent company has said that they will invest more, another $90 million in the Indian subsidiary over the next 5 years, so watch out for that name. Yet another pharma name that figures in the list, Lupin, which has received a tentative approval from the US FDA for generic androgel. Why is that important? Now, this drug had market sales, US market sales of nearly $950 million. So it's a reasonably sized drug for Lupin. Nevertheless, it's a tentative approval, so you might see some sentimental reaction there. That apart, we're also watching out for Indian Hugh Pipe Company, which has received orders worth 108 crores. Not a very big number, but you might see some reaction there. You have Jagran Prakashan, where they've said that they will consider share buyback on April 27, so keep an eye out on that name. Also, a couple of names on the back of earnings. You have 5 Paisa Capital. It's a mixed sort of quarter for the company, because even as revenues grew sharply by 60% on a low base, the net loss has widened from 3 crores to 7 crores. So that's 5 Paisa Capital. We also have a couple of bulk deals, starting off with Talwarkar's Fitness, where Tata Mutual Fund has sold 1.3% stake. They had about 1.75% at the end of the December quarter, so selling most of its stake in Talwarkar's. And then you also have Ajmera Realty, where promoter Rajnikant Ajmera has sold 1.4% stake. So these are some of the stocks you need to keep an eye out for.
Well, the most significant point he made was about, spending on investments in advanced technologies and also reskilling in order to capture the opportunities in the market. So his whole thing was about positioning the emphasis of the future, which includes pumping money into technologies such as Internet of Things, autonomous vehicles, as well as retraining workers in them. Infosys has 200,000 employees, and certainly a lot of them have only had experience working in legacy technologies. He needs to prime up the Infosys workforce to be able to handle client demand in these new technologies. And of course, he was also talking about localizing the workforce. That was another key thing that he made, the point that he made about Infosys hiring, also turning into one of the big hirers of college graduates in the U.S., even while he finds that the technology talent supply in the U.S. is constrained.
So Fortis Healthcare has received a 4th offer, and this time it is from Fosun International, and the company is willing to infuse close to $350 million US, that is close to 2,275 crore rupees. Now in this, as Fortis is in immediate need of funds, Fosun will be infusing close to 100 crore rupees within the next 45 days for convertible debt instruments, while the remaining amount will be invested by Fosun for equity shares. Now overall, they are investing close to 2,275 crore rupees in Fortis for 156 rupees per share. Now the catch here is that the company will be investing around 100 crore rupees for convertible debt instrument, but is asking for 1 month exclusivity period to undertake due diligence and to negotiate this offer. Now the due diligence will take at least 3 weeks, and after completing this due diligence, there are chances that Fosun International might lower the acquisition price or cancel the deal, because they are clearly saying that they will be negotiating the offer after they complete the due diligence. Now Fosun is also saying in the offer that they will not hold more than 25% stake in Fortis Healthcare, which clearly indicates that there won't be any open offer, because they are not crossing the 25% limit as prescribed by SEBI. Now this is the 4th offer that the company has received. Earlier they had received offer from Manipal, IHH and the Hero and Burman groups, and the share price that Fosun has given is in line with what the earlier offers were. Now Manipal had offered 156 rupees per share, while IHH group had offered 160 rupees per share, and Hero and Burman group had said that they will be giving that they had offered higher of the SEBI price or 156 rupees per share, and this acquisition is also intended to be done at around 156 rupees per share.
Well, in terms of earnings today, that will keep an eye out will be ACC. We are expecting not a good set of number coming in from the company. Revenue is seen up as much as 13% to a number of 3,500 crore as compared to nearly 3,100 crore that we've seen in the corresponding quarter. EBITDA is seen down for this company on year-on-year basis to a number of 380 odd crore. Margins are seen contracting to a number of 11% as compared to nearly 13% that we witnessed in the corresponding quarter quarter of the previous year. Profit is seen down by as much as 11% to a number of 189 crore. What we're looking at in terms of other parameters will be a volume growth, which is expected to be flattish for this company at a number of 5% year-on-year basis to a number of 6.93 MT. EBITDA per ton also is expected to come down for this company in this quarter at a number of around 549, which implies a downside of nearly 13%. Realization, however, realization per ton, however, is seen up by as much as 8% to a number of 5,062. What goes behind the expectation? Well, we're expecting cost to actually outgrow the realization, thereby weighing on the EBITDA performance of the company. Volume growth also is expected to be flattish with this company on account of the emerging capacity constraints. The things that we'll be keeping an eye out will be a volume growth and also your pricing power, which is expected to be remaining, which so far has remained subdued for cement companies, and also along with that will be your EBITDA per ton, given how higher power cost we've been witnessing for cement companies of lately.
Well, the top 3 stocks that you need to keep on your radar based on the delivery buying and selling as of yesterday. The first stock that you need to watch out for, that would be Bajaj Electricals. That gained nearly 6% in trade and saw delivery buying in excess of 55 crores. The delivery volume surged nearly 3 times at about 8.5 lakh shares as compared to its 5-day average, and the total volume surged nearly 4 times at nearly 65 lakh shares as compared to its 5-day average. The second stock, that would be DCB Bank. Now that gained more than 6% in trade and saw delivery buying in excess of 55 crores as well. The delivery volume actually more than doubled at nearly 30 lakh shares as compared to its 5-day average, and the total volume managed to surge nearly 3 times at about 1.8 crore shares as compared to its 5-day average. Jet Airways, the last and final stock to watch out for, gained nearly 5% in trade and saw delivery buying of almost 55 crores as well. The delivery volume more than doubled at about 9 lakh shares as compared to its 5-day average, and the total volume surged just about 35% at nearly 48 lakh shares as compared to its 5-day average.
Updates on the economy now. International Monetary Fund, or the IMF, has forecast that India will grow at 7.4% in 2018 and 7.8% in 2019. It's essentially kept its guidance the same. In the latest World Economic Outlook, the IMF has said that India would re-emerge as one of the fastest growing major economies. It also acknowledged India's progress on structural reforms, but flagged off key concerns such as high public debt and the inability to steer towards fiscal consolidation. The global body has projected that China will grow at 6.6% and 6.4% over 2018 and 2019 respectively. That's about India and China. Now on to the global forecast. The IMF expects that the global economy will grow at 3.9% both this year and next, but it warned of a possibility of a global growth slowdown on account of the ongoing trade dispute as central banks tighten monetary policy, the US fiscal stimulus subsides, and China's gradual slowdown continues. Now, there's clearly lots to talk about over the course of the day, and you'll find all the live market action right here on Bloomberg Quint Live. But there are also several stories on the website that you should consider reading, so do check them out. Here are just a couple of them. The BJP leaders in Jammu have said that the party has asked all 9 ministers in Jammu and Kashmir to submit their resignations. And the Central Bureau of Investigation has questioned 6 former senior officials of Bank of Baroda, including its former chairman and managing director MD Malia, in connection with the near 3,000 crore rupee alleged loan fraud by Rotomac. Well, that's all you need to know going into trade today, and it's going to be a busy day. Lots more coming up over the course of the day. Up next is Indian Open, and that will take you through Market Open. This is Bloomberg Quint.